And the number that sticks out to me the most, and I think explains all of this, is that 83% of retirement wealth is held in housing. Okay, there's only so many ways you can skin that cat, so to speak, and to access and put that housing wealth or that equity to work for you in retirement, reverse mortgage being one of those. We still have 12,000 baby boomers turning retirement age on a daily basis. And we now have our Gen Xers that are turning 60 this year. So we're going to see seniors continue to dominate the housing market and sell and buy more homes than any other age group because they are trying to tap into their largest asset, which is their home's equity. So what is a HECM? Well, HECM is FHA's technical name for a reverse mortgage, and what that stands for is home equity conversion mortgage. Okay, no mortgage payment requirements. Okay, I think many people think of reverse mortgages or HECMs, and they think that simply because you don't have to make a payment, that's your only option. But the program is designed to be allowing homeowners to not have to make a mortgage payment, and in doing that, interest still is a part of the program because it is a mortgage. There is an interest rate. That interest simply just gets deferred to the balance of the mortgage in that scenario. As far as a home, using it as a purchase tool, it's much like any other purchase. The goal of that being is that homeowners can maintain more of the proceeds from their sale of their departure home instead of being all cash buyers on their new home and exhausting all of those funds. Just as an example, in most cases today, and it's a sliding scale, the older you are, the lesser down payment, but the average down payment is roughly 60% of the home's value for most seniors in today's market with a reverse mortgage purchase, allowing homeowners to keep 40% in many cases of the proceeds from the sale of their home in their pocket, or conversely, increase their purchase budget by up to 40%. She wants to sell her home that she currently is worth $800,000 and purchase one slightly smaller for around $700,000. That's a single story, a little bit easier for her to get around and maintain. Obviously, her goal is to keep as much of the proceeds from the sale of her home in her pocket as possible to create additional income for herself and liquidity and to pay for some of those medical needs as she moves through retirement. So if Gloria did this as an all cash buyer, which is what this is, she'd walk away in her new home, no mortgage payments, and have kept $52,000 for herself. So she's going to keep in pocket $332,000 from the sale of her home versus the $52,000 had she been an all cash buyer. However, had they used the reverse mortgage, again, sold the home for $1 million, they netted $940,000 after their seller's costs. We said the new home was $1.7 million. The reverse mortgage loan would cover $810,900. So they were able to now purchase a home for $1.7 million and have no mortgage payments and still had $808,000 left over, where previously they were really only able to buy it $940,000, which is what they would have gotten as an all cash buyer.
Absolutely. And if you have any more questions, please feel free to reach out to myself or to reach out to Jeff.